The 21st. We're seeing Brent crude oil prices in Asia open a little bit higher this morning, but still caught in that sort of Goldilocks spot between $100 and $110 a barrel on Brent. I'm going to kick off this morning all the way over in the USA with Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Because, Mike, two numbers caught my attention overnight, and they both more or less were around a 10 million barrel number. The one number was the incredible 10 million barrels of US oil and oil products exports last week. And the other was the 10 million barrels of crude oil and oil products decline in inventories. A lot going on in America. How do you read it?
Hello, Sean. Thanks for having me. The way I read it is you got to be careful with the weekly data, the inventory data. And typically the key thing you learn in commodities is markets typically make peaks when inventories are highs and highs when inventories are lows. That's just what happened in soybeans a couple of years ago, and now we're at the highs. So I look at it in the macro, like you mentioned, sweet spot. We're in the sweet spot, $100 a barrel. And I see the greater risks are that we head lower rather than higher. For us to sustain above these levels, remember, we're well above cost of productions in crude oil and almost 4x cost of natural gas production in the US. Looks like we've peaked around 8 recently. And you look at that forward curve, I believe the forward curve, natural gas is around 4 versus the front contract, which reached 8 on Monday. And crude oil, similar situation. But I think we've gone back to where we were before, where crude oil is completely dependent on the US stock market going higher. It's adjusted this higher plateau. It's in a situation now where supply is going to be exceeding demand. It's facing a global recession. All that supply from Russia is going to China. And the market's priced for supply shock. And I think it's going to get demand destruction in the bigger picture. But in the macro, I think we're now at that situation where I think we're greater risk is global recession. Crude oil is more likely to go to 50 than 150. Just look at the implications. 50 is the average price we've been at for the last since 2014. It's well above the US cost of production. You go to 150, that's almost guaranteed global recession.
But Mike, just coming back to the original question, at the moment, it certainly looks like the US energy sector is on a big winner. Not only the extra high prices, but they're discovering a massive global market.
Well, that's the bottom line from this whole situation is the absolute US commodity producer boom. You're seeing it in the Corn Belt, the Rust Belt, energy sector. It's just an absolute boom when you're having situations where, in terms of just like the average price of corn on the screens is double the cost of production. The price of crude oil on the screens is almost triple the cost of production in the US. And I'd say it's more than double. So it's an absolute boom for the producers, which means pretty significant supply. And you're seeing that everywhere. The legislators are complaining about energy companies making too much money. Well, it's a boom and bust. It's a boom and bust industry, and this is a bit of a boom at the moment. But we all know what happens with booms when you have massive supply, massive profits, and fully expect that supply. That was the situation before COVID to continue to trickle on to overwhelm demand, and we have to be able to export it from the U.S. And typically, you can't do that. One key place you can't do that is natural gas.
Let's go to Eastern Europe with Andre Belli, professor, founder, and CEO of Balsan. Andre, if U.S. energy sector is a big winner here, is the counter to that Russia energy sector is the big loser, but they're still making loads of money and seem to be getting all their products to market?
Well, the situation is very complex and is not really linear, let's say like this, because Russian oil production started to decline. It has produced less in April than it produced in March, and it produced in March less than it was actually in February. So the production rates are going down. However, because of the high global price, Russian exporters are still making money even when they sell the oil at the very much discounted rate compared to the world price. So sometimes the discount goes up to $35, $40 per barrel. But when you have $100+ dollars per barrel at the world price, it still makes a profitable market. Moreover, it remains unclear in case if the European Union decides to go for an embargo, who would replace the Russian oil? And Russian exporters have an understanding that is not that easy to get out of the market, and therefore there is a certain confidence in the fact that the market share will still be there.
Let's go and come back rather than go, because I'm here as well. Let's go to the Gulf and welcome our regular commentator in Bahrain, Mr. Omar El Ubaidli, Director of Research, Bahrain Center for Strategic, International and Energy Studies. Omar, again, the same to you, the other big neighborhood for energy production here in the Gulf. Are we the big winners to this rather tragic equation in the Ukraine?
Well, the opportunity is there to be a big winner, but in terms of supplanting Russia. But the reality is that European Union's economic policies have always been intermeshed with the European Union's political policies, geopolitical policies. And in particular, there's two issues which the EU always focuses on when it talks about trade, whether that's oil or otherwise, which are first, climate change, and secondly, human/political rights. If the Gulf countries were to demonstrate compliance with the EU's lofty standards regarding climate change and human rights and so on, then absolutely is a huge opportunity, because the proximity, the efficiency, the low prices, etc., etc., etc. However, I actually don't think that that's going to happen. We've seen positive overtures on the climate change front. According to the EU standards, you've seen the net neutrality announcements, you've seen Saudi Arabia and the UAE investing heavily in renewable energy, and in an earnest way, I believe, not just some sort of window dressing. But the reality is that when it comes to domestic politics, to regional politics, there's still a big difference between what the EU regards as the grounds for a deep partnership and what the Gulf countries regard as acceptable from their side. So I don't think there'll be a rush. I guess the pipe dream that the EU will be pursuing, therefore, is some sort of rapid transition to renewable energies such that they don't need this oil in the future. But as Mike and Andre intimated, that transition is not as easy as they may have anticipated. And so what we're going to end up with is probably more volatility, more chaos, and more sort of political convulsions for the next year.
Mike, coming back to we have these sort of two events happening at the same time, which is the US becoming once again a very significant energy exporter, and maybe a lot more to come with LNG only in the early days and still quite significant. And at the same token, China seems to be kind of maxing out on demand side, seems to be peaking out. So there are a lot of issues emerging around China. Saw a big data point yesterday that over the last 3 years, their birth rate has declined by 30%. What kind of a problem is that over the horizon? But ultimately, the US energy becoming a big exporter at a time when China seems to be on a retreat. How big is the China retreat from this sort of bearish outlook that you would see?
I'm glad you brought that up, because to me, that's the key thing I started pointing out years ago. Now, we all knew the property crisis was coming, it came. We've seen a peak in China imports of crude oil around 7 million barrels a day and starting to head lower. Total sales for automobiles last year in China was almost 20% were EVs. We all know where that's going. So I fully expect that China has peaked in terms of global commodity consumption and demand. And we're seeing that everywhere. Now we're having issues with prices and major economic slowdowns, pushback on free market capitalism, which was significant, pushback on cryptos. I see an autocratic society that just has reached its limits as the world rapidly advances. And Omar and Andre both touched on it. There was pre-existing trends in space that this whole situation accelerated. That is the shift to renewables. In the meantime, what is the main reason why the U.S. has been able to become the largest net exporter and net producer of energy and agriculture? Simply adapting that technology. Russia and China are falling behind that space. They don't have the intellectual property to do that in the system to do it. So to me, this accelerated a pre-existing process. Put it 5-10 years from now, and this is a rapid and massive new world order. We can't even imagine the things that we'll invent to make the system more efficient. And now we have morality and necessity and war to accelerate the human condition. So I look at this as this is the great commodity boom. It's a great separation between the pushback in China actually heading lower. And I hate to say it, it's just the fact. Look at America moving higher. When people push back on things like the dollar, I'm like, yeah, go ahead. Show me a better currency. There's nothing even close that can surpass the value of the dollar. And then people talk about all the dissent in the UN. Virtually 80% of the countries voted to condemn this invasion and continue to do that. So I look at this as this is a great separation between Western values and renewable energy and the shift towards America. And Russia just gave America the free card. And I just look, I'm actually from the Midwest. I'm from the Corn Belt. They're crushing it in terms of profits now in what they're producing in corn, soybeans, and wheat. And now in energy and LNG, how did the U.S. become the largest exporter of LNG on the planet? Simply by harnessing that technology and that trend. We still only export about 13% of our natural gas. The trend is clearly higher, and it's just going to accelerate, but then it's all going. I mean, I drive an EV for a reason, and I have solar panels in my house for a reason. That whole process just took off.
Andre, the big developments overnight in the context of the Ukraine conflict, Putin tested a very powerful ballistic missile yesterday, which has certainly been the headlines in most of the global news cycle since, as that sort of escalation piece alongside the likelihood that Sweden and Finland, your neighbors, are going to join NATO in the coming months or weeks, perhaps even. What's your outlook for this geopolitical crisis to escalate beyond this current parameters?
It's very difficult to say, and I wouldn't like to comment it because nobody knows. I don't know more than you do, and neither of us knows more than our audience does.
Well, I'll tell you, just to help you, it's escalating, right? You've got 2 European countries going to join NATO in a matter of weeks. That's escalation. A ballistic missile is escalation. You don't need to be a nuclear scientist to figure that out.
No, I don't question that there is an escalation, just we cannot predict the outcomes of the escalation. But what is actually interesting maybe for our discussion is what's going to happen to the gas markets, to gas flows from Russia to Europe. You may have noted that earlier, like a month earlier, in March, Russia suggested that all gas traded from Russia to Europe will have to be paid in rubles. And that's a very significant change in the existing contracts of gas supplies from Russia to Europe. So considering the change, it's quite normal that European counterparts are asking for clarifications or even go for litigations. However, according to the existing long-term contracts, gas flows cannot be interrupted in case of any disputes or litigations. However, again, the question is whether there is an intent in Moscow establishment to use this transition to ruble payment and probable litigations and disagreements from the European companies to actually disrupt gas flows from Russia to Europe. That's actually the main question that we are asking today.
Omar, looking at the outlook vis-a-vis where OPEC Plus goes and the Gulf states, inevitably we're going into a period now where this massive OPEC Plus pact starts to wind down, right? The end is in sight, September. How do you see, obviously we've seen in the last few days phone calls between Moscow and Riyadh, Moscow and Algeria, the big sort of OPEC Plus players. Iraq has said a few things. Where do you think this goes? What is the purpose of this? We had Narendra Tanea from India on earlier the week saying that the OPEC Plus agreement is becoming irrelevant, is becoming redundant. Where do you see this going as a pact and as a market tool?
First of all, at the superficial political level, I think there's going to be a strong desire to continue it. Russia is isolated internationally, and many of the countries that are in OPEC or OPEC plus are countries that are, either neutral regarding the current conflict or are siding with Russia. And Russia will not be in a hurry to just sort of, suspend all that and go it alone. That's on the political level. So even if it serves no economic function, just in terms of, having friends and having influence, I think everybody involved will want to continue that. In addition, I think there still is an economic need, because the reality is that despite the shale oil revolution's disruption, the investment cycle for oil remains long and remains risky. And much of the remember that oil prices were rising significantly prior to the current Ukrainian crisis because of the cutback in investment that happened 3 or 4 years ago, and now the fruits are showing. So ultimately, the headline goal of OPEC plus and all these oil agreements is to manage demand and supply in a more predictable way, so that you can get investments smooth out, and you can try to avoid these sharp spikes and troughs in the oil price.
So I think we're well beyond that.
Well, I mean, but actually, in principle, bizarre as it may sound, it could be even worse than what we've seen were it not for some of the efforts at coordinating some of these decisions. I know it's
well, let me just put this to you, Omar. We've heard repeat of, obviously, this current moment in time is putting a lot of stress on the geopolitical posture, and of course we know the history of OPEC plus is full of countries that have been at war with each other, that don't love each other, yes, but ultimately work together. But there's this narrative that they're not going to get into the geopolitics, but at the same token, you have Saudi Arabia saying that they're not going to be increasing supply while they're under attack from the Yemen. That seems to be pausing now. I'm just wondering what the chances are for OPEC plus, the Gulf OPEC, if you like, to avoid being pulled into the vortex of this global crisis that is now emanating as the tremors repel out from Ukraine.
But look, regarding this, first of all, this US call for increased production, I think it's important to draw a distinction between the US's interests and the Democrats' interests. I think when Biden talks about the need to increase oil, he just doesn't want to get destroyed in the elections, and he knows he's going to get really taken to the cleaners in the coming elections, his party. And
I'm not sure about that. We've just heard a few minutes ago that, I mean, at the end of the day, the US is a major oil exporter now, and more supply into the market, of course, is helpful. But I think that ship has sailed. I mean, we're talking about a major geopolitical crisis in Europe where the Europeans are contemplating embargoing Russian oil. They need oil in Europe. Right. I mean, this is not a facade. This is a big reality.
No, but I think what Biden's, all these overtures regarding oil production are regarding the fact that, and we've said this before, gas prices in the US are the primary determinant of, or a strong determinant of which way people are going to vote. And people are upset with the US government. They're upset with Biden, and I think they're going to vote Republican. They're going to shift Republican strongly.
Yeah, I think that, I mean, I take your point, but I don't buy it. Personally, there's so many other factors. I mean, inflation, Mike's just told us everything can go up in price has gone up. I mean, a few 100,000 barrels from the kingdom or from the Gulf or from anywhere isn't going to change the curve on $4 gasoline.
But here's what's going to happen. Biden doesn't care if Saudi Arabia doesn't increase it. All he wants is a scapegoat for the fact, the ills that the voter is facing. He knows that, as you say, another 500,000 barrels is going to make a difference one way or the other. But he realizes that a significant part of the blame for what's going on at the moment is the monetary expansion that happened during COVID from the Federal Reserve back to Trump's time, even into his time, and just general mismanagement of the international system, which he is partially culpable for, although Trump obviously played a big role in. But rather than get into all those complexities, let's do what OPEC's always been good for, which is taking the blame for some domestic problem in the US. And this is an arrangement that everybody's quite happy to continue with at the moment because it serves narrow parochial interests both in Saudi Arabia and in the US.
Let's go to this survey question and give everybody else a chance to sort of weigh in on this theme that I'm banging here this morning. From an energy producer's perspective, and of course, that's a very narrow perspective in what is obviously a very tragic situation for millions of people. But from an energy producer's perspective, who is the biggest winner of the big three from Russia's war on Ukraine? The US, as we've just been talking about, expanding its opportunities quite significantly, and the outlook for that is even more. Russia getting huge new revenues, developing potentially new markets into Asia, or Gulf OPEC. Which of the big three is the winner so far, if indeed one wanted, as I use such crass language, but I think one has to identify that in all of these terrible things, there are winners and losers. Mike, just picking up on some of the comments that Omar made there, but also looking forward into that sort of political cycle.
The voter, you should ask him. He's a voter.
Yeah, exactly. The cycle now that we're caught in. I had a Laurie Tayan on, one of our regular commentators who on earlier in the week, and her view was that the Iran deal has now been sucked into the US election cycle, and it's not going to happen until after the election cycle. Ultimately, how much wiggle room does the Biden administration have on these global issues as the election cycle sort of looms large now?
I think Omar very well explained the U.S. political situation. And it's taken OPEC or Iran as a scapegoat. Yeah, that's great. That'll help Biden with the votes. But there's already toast. There's a normal cycle. You always swing back against the incumbent party during the midterms. That's going to happen. And now there's a major reason for it to happen, inflation. Omar's right about that. I fully expect the gas price is going to come down by the time we get to the election. But it doesn't matter. It's already baked in the cake. There's inflation everywhere. And you have to go push against the administration. The first thing they did is they cut back in that Keystone pipeline. It would kind of be nice to have that right now. So Omar's right. But that to me is also, if you just look at the organic, there is things like the Defense Production Act right now. And there is the U.S. is completely capable of bringing on massive supply, not the U.S. and Canada alone. Liquid fuel consumption or production is going to be a surplus of almost 20% by next year, just by normal trends of consumption, if you include US and Canada. And that's massive. And that was a trend before COVID. So I think that's accelerating. LNG is part of that. Grains, corn, wheat, soybeans are all part of that. So the key thing from your question is, I think US and OPEC both, how do you measure the winner? But it's clearly that Russia's the loser. And there's a simple little factor. If you crush that price of crude oil down to $50, which is where it was the last 5 years, what hurts Russia the most? Exactly that. And the US knows that, and the US can do it. If we just open up some of our, the drill at will the Trump administration used.
Mike, in terms of just following up on that, it seems in some ways perhaps the big question that's to be answered in the US midterm election is really on the Republican side. Does Trump's team win, or does Mike Pence kind of, McConnell middle of the road of the Republican? That seems to be where a lot of the fight is landing. Your thoughts on the outcome or what that means?
Well, I'm going to stay away from that one.
Okay.
I think Trump's a little bit on the way out. He's unfortunately gone. He's in Florida, where I am now. But to me, the bottom line is the macroeconomic is we are clearly heading towards a recession. Futures curve shows that. The Treasury curve shows that. Market's so overdue for it. And I think that's where we're heading. That's where
the equity markets are fighting hard against it, right? They're sort of in the
exactly. Well, they are, but did you notice the Federal Reserve just said, it started hitting at 75 basis points. So there's this massive debate now. And the number one thing I learned trading as a Fed watcher 30 years ago is don't fight the Fed. And the Fed will do everything they can to push inflation lower. And stock market decline is part of that. They have to reduce the ability for people to buy stuff and reduce that wealth effect.
Andrea, looking to Europe, of course, the big decision that we're expecting another round of sanctions to come. Will our oil or not be inside that in some way or another? And also over the next few days, this weekend, of course, while we're off here in the Middle East, the big second round of the French presidential elections. Your thoughts on the outlook for that in particular and its possible ramifications for European unity?
Well, starting from the last point, of course, if Marine Le Pen wins, then the question of the European unity will be even more amplified. Moreover, Marine Le Pen has a very clear plan of weakening the EU budget and is the second biggest contributor to the EU. However, I don't bet on her election. Yet, the risk is there, but I don't bet on her re-election. If she wins the elections, indeed, it's going to be bad news for the EU budget. Then,
at the very least,
I would say the very least, but what is the short-term effect going to be?
Right. Okay.
This one.
Yeah.
Then, regarding your first question regarding sanctions,
yeah,
it basically drives me to think over that among the three winners you have indicated,
yeah,
we should not underestimate the Gulf countries, because now they are good guys of the club. Remember, just a few years ago, all the Europeans were saying that it's important to get rid of the OPEC, and Russia was in the good club, in part of the good club. But now Gulf countries are, and note that the countries which are able to fulfill necessary supplies are in the Gulf, including Iran, including Iraq. Also, if we look at the Gulf countries in a broader sense, that can also include Libya, right? So these countries of the traditional OPEC, I would say like this, without the plus, are holding the card in the game. However, of course, there are many institutional issues that face difficulties, that reveal difficulties that can exist, particularly in Iraq and in Libya, to increase oil production. However, many questions are about Iran. Will the West open up Iran in order to close down Russia? Of course, it may look like when you release a prisoner in order to help to catch another criminal. And that might not be looking good in terms of credibility of the Western moral stances, let's say like this. However, overall, OPEC seems to be in a very good position, the conventional OPEC.
Let's go to the survey result to give Omar the last word, and on that point, whether OPEC are indeed in that great position. According to this room, at least, U.S. sort of tipping the Gulf with Russia way in sort of last place. Omar, just to comment to pick up on that, what Andres said, but also I'd welcome your thoughts as a close watcher of the Iran nuclear talks. What's your prognosis for its outlook? And with it, of course, the expected increase in supply.
First of all, picking up on what Andrew said, I wasn't aware that the West had much moral credibility left in order for it to lose any more. But insofar as, yes, I agree with him that if there is any left, then it's certainly how they play their cards could be disastrous. Regarding the Iranian deal, I actually still think it's going to be sealed. I think that the two sides are experts at rhetoric and subterfuge and deflection, all this kind of thing. The reality is that from the outset, before his election, Biden said he wants to get this thing done. And the last sticking point, which I think is the IRGC's designation as a terrorist organization, I think it's just going to be some delaying tactics, but ultimately I think they'll remove the designation and the deal will get done. And then after that, what's going to happen? Well, I'm afraid for as far as the US is concerned, if it's looking for more stability in the region, it's not going to get more stability. It's going to get much more instability in the region. And it's already got its plate full with instability in Eastern Europe. But unfortunately, the US foreign policy for the last, 20 years has been a train wreck, really. And I just expect that to continue.
Tell us how you really feel. No, I insist. Omar, just to wrap up on I wanted a quick sort of diagnosis of the Yemen peace talks, or the outlook for Yemen ceasefire.
Right. So I think that, actually I was at the Yemeni dialogue in Riyadh that happened with the GCC Secretary General a couple of weeks ago. And I think that there's been important progress being made in terms of generating a united front that is, that can apply pressure on the Houthis, because there was a problem of, disintegration of that bloc. So that's definitely a step in the right direction. But ultimately, I think that it's going to be very difficult to get anything lasting until the Iran nuclear deal issue is resolved, because I think it's clearly a card that Iran is playing in the issue and a card that the Houthis are playing in the issue. So until we have some sort of certainty there, but in general, the fact that we've moved past Hadi and we have a more coherent bloc is a step in the right direction. And I think that with the economic pain that the Houthis have faced for the last however many years, they're probably more open to some lasting agreement than they were in the past. And hopefully, for the benefit of all parties involved, we can get there.
Well, it's certainly one to keep an eye on, as it obviously would calm things down in the immediate neighborhood. We wrap up the week on the 21st of April, at least our week here in the Middle East, with Brent trading at a bit above $108 a barrel. A point well noted in the chat room by Rustin Edwards that from his perspective, at least, Washington has a window to get this deal done before the midterm elections rather than afterwards, when the likelihood is the Republicans will control Congress and very difficult to get a deal done there. But my one challenge to that would be there was never any chance that this deal was going to be ratified by the Congress. It's always going to be an executive order, whatever the situation. And so whether the Republicans control Congress or not, it's still an executive order situation, which keeps it on the fragile list, even if Biden signs up. Anyway, that's a wrap. Thank you, Mike. As always, great to have your insights. Andrea, wonderful to get your thoughts from Eastern Europe. And of course, Omar, as always, from the Gulf, great contributions. Have a great weekend, everybody. We'll catch you on Sunday for Week in Review.